Okay, Tuesday, July 14th, less than about 2 minutes till market opens. We had this 1 day gap yesterday, this 1 day fair value gap, and then this 1 day bullish order block. Price filled it, and in the last hour and a half, we had an impulse move to the buy side, starting this 8 a.m. candle. And just kind of explaining the other key levels, we have a gap fill up here on NQ. It's very small. Price will naturally want to fill a gap, but it doesn't have to, and it definitely doesn't have to today, but it's almost acting as a small magnet for price. And ES has a gap fill that's about 3 times the size, so about this big. Same deal for that. But what's important to note is that this impulse move to the buy side is within this 4-hour gap here. Now, just a gap is different than a fair value gap, right? In both cases, we will want to fill inefficiency to some level. If it's a fair value gap, we might want to fill 50% of it, 60% of it, and then continue in the dominant trend direction. But if it's not a fair value gap, price will tend to fill the inefficiency of the entire gap, taking out the high. In this case, in a bearish context, it would be the first candle in that bearish fair value gap sequence, meaning this candle up here. It would take out that high, filling all of the inefficiency in the gap. And the reason why this isn't really considered a bearish fair value gap is that by the rules of an FVG, the candle body of the first or third candle should be within the wick of the second candle. In this case, the body of the first and third are not within the wick of the second. So this is more of a continuation. What substantiates that is that the second candle is gapped down from the first, meaning this was a pretty strong impulse move to the sell side, continuing price and not creating a valid fair value gap. So I'm not going to look at this and think that, all right, I should take shorts up here. No, I'm going to look at the impulse move that we had this morning, see that we had that on ES as well, and notice that yesterday we filled this 1 day gap and we are rejecting off of a 1 day bullish order block. 1 day is more impactful than a 4-hour, especially if that 4-hour does not follow the defined rules, the defined parameters of what a fair value gap should be. So a lot of people will look at the 4-hour on that and think, oh, we're in a massive gap, price is rejecting, let's take shorts, let me look for confirmation. But no, it's not the case, not the case at all. So knowing that my daily bias is bullish, at least for now, if we see price manipulate heavily in one direction or the other, we might have to change our bias accordingly. But from what we're seeing right now, my daily bias is bullish. Seeing that, I marked my 1-hour intermediate low right here. So we have a 1-hour valid bullish fair value gap here. You can see the candle body of the third candle is within the wick of the second. And we have tested this fair value gap once. So an intermediate low in a bullish context is the lowest low within a bullish fair value gap, which in this case it's this. Assuming this bullish fair value gap wasn't even here, price would naturally grab liquidity at a low in general, right? That's what the market does. It'll take out a low, generate liquidity temporarily or long-term, continue in the opposite direction. Same for a high. But the fact that this is within a bullish fair value gap, which by nature generates liquidity to push price to the buy side, a low within that is like double the confluence. It almost makes it even more likely that price will retrace into here, take out this low, enter this gap, and continue to the buy side. So I marked that intermediate low right there. Also some decent, like, just tiny wick rejections here. Good, like, ascending sell side liquidity that price might want to take out. And it is very possible that at this level we have a bullish S&T divergence. Maybe, NQ does end up taking out this low, but then ES doesn't take out this low once the 15-minute, 30-minute, 1-hour time frame finishes. Then we'd have a bullish S&T divergence. NQ would be descending, ES would be ascending in relation to this low. Then we could for sure take longs and look for confirmation. So that's just something I'm throwing out there, which could happen, which I've seen happen through, prior market data. I'm talking over, 180, 360 days. I mean, it happens. Now, we have that marked on the 1 hour. Market is open 3 minutes ago. On the 30-minute, we have a 30-minute bullish fair value gap right here. And I don't know if I would take a trade off of a 30-minute bullish fair value gap that alone, but that 30-minute is within this 15-minute intermediate low. So, it's very possible, right? We have a 15-minute intermediate low that is resting within a 30-minute regular gap. Candle body nicely within the wick of the second candle. The reason why I don't want to trade this is because we have London high right here and London low right here. London low is actually lined up with this intermediate low, right? This is a key inflection point. London low and intermediate low of this 1 hour gap. It's the same candle. It's the same level, right? And then we have London highs right here. So I'm thinking taking out London lows while entering this 1 hour intermediate low, that could generate some liquidity, and then we take longs from here, or a less discount, a more premium entry in relation to that could be this 15-minute gap right here that has a London high resting within it. That I would be more comfortable taking. Taking an entry up here, I don't really love. Again, naturally, every morning, the market will want to accumulate price, manipulate price, and distribute price. Accumulation can happen in the pre-market stage or very, very early at New York Open, and then price will want to manipulate, and it'll want to manipulate buy side or sell side. And manipulation is just we have price take out a low or a high, and that is a manipulation. So it could happen to the sell side or buy side, and then distribution could be in the opposite direction as manipulation or in the same direction. So we can manipulate sell side and continue sell side as our distribution, or we can manipulate sell side and then distribute buy side. That is something we have to figure out based on what our daily bias is, the key level that price is currently at. You have to adapt in knowing what direction price will distribute. But the point of knowing that price will manipulate is that you need to have patience in price taking out a key level, entering a key level. That is price manipulating. If you don't do that and you just enter at 9:30 a.m., you enter a continuation trade without price very clearly taking out a high or a low, then the likelihood of your trade carrying out is pretty low because market needs to generate liquidity, and it does that very well through AMD, accumulation, manipulation, distribution. That being said, I mean, we're kind of rejecting off of this right here. Let's see if there's any bearish fair value gap that we might want to take out. Maybe it's possible. It could be that we're very heavy bullish and we might not even want to retrace into London highs or London lows. So for that sake, let me just mark this bullish gap right here, and then look to see if we inverse this 3-minute bearish fair value gap. We have a candle body slam right through it on the buy side. That is something I could potentially wait for. If I see that, and I'm getting some confirmation on ES as well, I might enter longs. Until then, I'm waiting for us to take out London highs or London lows, because in those key levels rest a bullish confluence, such as a fair value gap on the 15-minute or an intermediate low on the 1 hour. So we're going to wait, and I'll resume once we see price enter a key level. Okay, we have two things that could happen, and I've kind of drawn them both here. If this candle right here on the 3-minute ends up, or on the next candle, right, ends up closing above this second candle in this 3-minute bearish fair value gap, then we have successfully inversed this 3-minute bearish, and I'd be comfortable taking longs. If we don't, and we flush down here, then we have a bearish SMT divergence, because in relation to this 9:27 a.m. candle, ES took it out, and Q has not. So we have a bearish SMT, and we know SMTs, especially on a low time frame, it's not going to drive price for a long period of time, meaning we're not just going to be bearish for the whole day necessarily, but it's often used as a slight pullback in price to find an equilibrium, to enter a discount zone, and then enter a trade targeting your daily bias in the dominant direction. Meaning, if we have a bearish SMT divergence, we might want to enter a discount zone, enter a key level, generate liquidity, then continue in the dominant trend direction. That is often what an SMT will do. It's also what confuses a lot of people because they'll see a bearish SMT and then they'll immediately think, oh, we're taking shorts today. I'm going short. Price wants to find an equilibrium. It must find its equilibrium 200 points below where price is currently at. No, it's just going to be a temporary pullback. Then you enter your trade. Then it continues in the dominant direction. So this is really like a setup. It's like an alley-oop for you to actually make the shot. So now, I mean, we're going to wait. See if we have a candle body slam right through this high or not. And then I'll resume once it's done one or the other. Okay, we're not going to enter off of this bearish fair value gap anymore. Reason being, it's about to be 10 a.m. and we now have a 1 hour gap. So I've marked that as well. I've included that in that key bullish level with this 15-minute gap right here. So that's my prediction that price will come down here, enter this discount zone, and then continue bullish. If we don't, then I'm not entering a trade. Why I like this is because we have very clear ascending sell side liquidity resting above this bullish fair value gap. That would be our manipulation. So remember when I said AMD, accumulation, manipulation, distribution, how I said that accumulation can happen in pre-market, but also around market open. This is proof that it's possible. It could happen going into 10 a.m. as well. Price is accumulating. This is consolidation. It will then, so this is accumulation. This is manipulation. This can be distribution, okay? That can be distribution or accumulation, manipulation, distribution. And whether it goes buy side or sell side for the distribution is based on our daily bias, which in this case is bullish. So I am thinking it will probably be that. Also has to do with the key level that we're in. Are we distributing? Is distribution happening in a bearish confluence or a bullish confluence? In this case, it's a bullish confluence. It's a 1 hour gap, also a 15-minute gap. So that's what I think price will do. I'm trying to see if at this level there will be a SMT divergence or not. There might be, but we're gonna have to wait. It's possible that NQ takes out this low while ES does not take out this low. Then we have an SMT while also sweeping out sell side liquidity, while price entering a 1 hour and 15-minute bullish fair value gap. That's longs all day, and then probably targeting the prior high right here from 8:30 a.m. So we're gonna wait for price to manipulate, and then we'll enter a trade once it does that. Okay, just as I predicted, NQ took out this 9:35 a.m. low. So we have a bullish SMT divergence right after sweeping sell side liquidity. ES has not taken out this low, by the way. That's what makes it an SMT, obviously. And we are in a 1 hour gap now. The only thing I need is confirmation. So I'm looking for a low time frame bearish fair value gap that we will invert. Immediately we enter. Move a 30-second one there. I kind of want the 1 minute. We're going to have a 3 minute too, potentially. Could have a 1 minute right here. I see that happening. I want to define my risk first. So let's say I enter on here. It's about 50 points. 50 times 2, it's 100. 500 divided by 100 is 5. So I could risk 5 micros here. I'm just waiting. That's it. Waiting for confirmation. Okay, it's a good displacement candle. I need candle body finishing above this candle right here for it to confirm to me. Nope, candle body closed within on the 1 minute. That's us respecting this 1 minute bearish. I need a 1 minute candle to finish above that. That's the only way. Might see 3 minute in the meantime then. Also 5 minutes gonna pop up as well. That's something important to note. Yeah, we might have to wait for the 5 minute. We're about to have a 5 minute gap. All right. I'll resume once we invert one of them, or once it's it's very possible we're gonna have a 5 minute gap. So then in that case, my inverse of a bearish fair value gap on the highest time frame would be this right here. Yeah, it'd be this. This would be my confirmation level. Unless, yeah, okay, I was about to say, unless we take out this low again, we retry, and then I see something on the 1 minute again. That could be good. Yes, take out London lows. That is ideal. Then I can search for something maybe on the... I do want to take out London lows. I mean, it's right there. I don't feel comfortable entering a long position here when we have this magnet of a key level resting right there. Oh, sorry, that's London highs. All right, 5 minute bearish fair value gap is in play. SMT divergence is still valid. ES still has not taken out this 9:35 a.m. candle. Okay, there's no 30-second bearish fair value gap. There's no 1 minute bearish. All we have is a 3 minute, but resting right here at 3 minute is when the 5 minute and is literally 5 minute bearish inefficiency. So it'd be ridiculous to take a long here within a 5 minute bearish fair value gap. I just wouldn't be comfortable doing that. Come on, take out London highs. We're gonna have to wait. I'll resume once we do one or the other. Okay, we ended up, so there's no longer an SMT divergence. I'll say that. Actually, we do, but from this low over here. We do. So we have an SMT down here, bullish SMT, right? ES in relation to this low is like right around here. So we've taken out this low just barely on NQ. Now I'm looking to inverse this gap here because on the 15 minute, that's going to end in 8 minutes. I kind of want to see candle body close right around here, or fully fill that gap, but I need confirmation. That's kind of the tricky thing here. I like that we swept London lows. That is perfect. I love that. I thought we were going to come down here and take out, sorry, we swept London highs. I thought we were going to take out London lows for a second, take out all of this south side liquidity, enter this 1 hour intermediate low that has an inflection point with the London lows. But we didn't do that. Instead, I'm looking for a 2 minute now. Let's see. Say candle body close right around here. This would be my stop loss. 100 times 2 is 200. 500 divided by 200 is 2.5. We'll start with 2 micros, and we can add a contract if it makes sense. But there you go.
Order
candle
filled.
Body closing above. I like this trade. If we pull down 50% of the way, I will add 1 contract, because that should make my maximum stop loss be 500. And if not, I'm okay with that. Let's go for a 1-to-1 ratio. Now we wait. I love this setup. I love this setup. Rejecting on the 1 hour, respecting this bullish fair value gap as of now. Granted, we have 37 minutes left. 15-minute candle body close within the gap, taking out London lows, deep retracement into London lows on NQ, creating a bullish SMT divergence, which is something that, you know, makes it even more likely for price to carry out and us and longs be valid. I didn't need there to be an SMT, but it's nice to see ES not take out this low. So that is confirmation price wants to find its equilibrium and retrace, and our 1-to-1 I hopefully carry out. And then again, 2-minute, nice clean full candle body close on this 10:20 a.m. candle, closing above the second candle in this fair value gap sequence. Perfect. I like that. Yeah. One thing I kind of didn't notice is that the first candle here is an order block candle. I don't think it matters. That would mean, like, if we have a candle body close within the order block candle, it could be us respecting that candle, but I just don't think so. This is a pretty full body candle, absolutely disrespecting this bearish fair value gap. So I mean, we'll see. If we do end up reversing and taking out my stop loss here, that's something I can add to my notes, that if that bearish fair value gap that I'm looking at has an order block candle as the first candle in the sequence, I want to make sure price closes above the order block candle, not just the second candle, because this is still selling pressure, this candle right here. So let's see. I'll resume once we hit TP or take out stop loss. Okay, we hit our TP. Turns out that inverse on the 2-minute was sufficient. Hit our 1-to-1 ratio. I think it's likely that price will want to take out this high as well, but profit is profit.